Hello there, Forex traders around the world. This is Mohammed Kande coming at you with a weekly analysis on a pretty good setup here. NZDUSD is going to be the pair that we're going to be looking at this coming week and probably for the rest of the month, right? I'm really excited about this pair right here. I'd love to break it down for you guys, and as you guys know, I like to go from the monthly and work my way down. So NZDUSD is it's a really clean pair. That's why I like it, and I think that we're gonna like this setup that we're looking at right here. So if you guys always do this, always go to the monthly chart and just kind of take a look at it. It kind of helps you get an idea of structure, get an idea of what the true trend is, because in a market you have a technical trend and you have the true trend. So the technical trend is what technical analysis, people who are relying solely on technical analysis, right? Solely on technical analysis. So they'll look at it on an H4, on a day, on a D1, on a 30-minute chart, on an hour chart, and usually those are just technical trends. The overall trend is usually on a monthly and on a weekly, on a bigger time frames. And usually once you have an idea of what that is, all the other trends under the main trend on a weekly and monthly are usually going to be like they're not lasting long. There's just pullbacks, right? So if NZD/USD is on a major downtrend on a monthly and you have an uptrend on a daily, that's probably a pullback to a fib level, to a zone, to a structural area, and same thing on an H4, on an H1. So if the overall trend is down on a weekly and monthly and you see a strong push up on a daily, don't be alert. Understand that you have to mark out your areas, right? Your structural areas, and understand that as long as those structural areas are not breached, the trend is still valid. So for NZD/USD, let's close this out. For NZD/USD, we're gonna pull up our fib real quick just to kind of have a quick understanding of what we're looking at here. So from the major high to the major low, right? Market went from 77.48 all the way to 62.42, and then the market pulled back to 88.6. And the reason why I have these zones marked over here and over here and over here is because, actually, let me change the color of this zone right here, so that way you guys have a better visual of what I'm looking at. Okay, so the reason why I have these zones in blue is just to show you what the market does, right? So if you guys take a look right here, the market came down, the market pushed up to the 88.6 and then came down, pushed up to the 78.6 and then came down, right? I was expecting, because of this big bullish candle right here that we had last month, I was expecting a push to the 61.8 before continuing our overall trend. That's what I was expecting, right? And that may still happen. We're not 100% sure, but that's just to kind of give you guys an idea. This is just me using structure, trend, and fib. That's it, right? I see that the market did its initial push to the upside right here, right? And that coincided with the 88.6, so I have the 88.6 pullback right here. And then the market, of course, came down and came back to previous area of structure, previous support area, right? So which held up pretty strong. So the market came and retested the 78.6. And if you guys look on your charts and you just back test this, you're gonna see that the market does this over and over and over again on all time frames. The market will do this on a monthly, on a weekly, on a daily, on an H4, H1, 30-minute. The market always does this right here. You know what I mean? This is a very good way to catch stupid entries in the market. Those sniper entries that you see your favorite Instagram gurus getting in. Some of them who are actually authentic. This is what they do right here. You know what I mean? This is one way to catch, to perfect your entry and catch a really good entry. All right. So just got off a little off track there. But so as I can see over here, this is my fib. I'm looking at it. Market came down to the 88.6, and then market went to the 78.6, and then market went to the 61 point. Well, we're looking for market to go to the 61.8, but we're not 100% sure that the market is going to do that, right? So let's break it down further. That's the monthly, right? Let me go ahead and close this fib right here. And if you guys take a look right here, the 88.6, and this is the zone right here. So market came down, you see, so market came up, retested this zone right here, the zone held, so market started coming down, right? So I was looking for market to come down over here, but when market broke the 68.17 area with a huge bearish engulfing, I began to look at my contingency plan, right? So the only thing that is constant in our market is change, right? Anything else, you can throw it out the door. Change is constant, and you have to be flexible with your analysis and rigid with your rules. So I follow my rules to the T, but I'm always flexible with my analysis. All right. So now we are looking at the weekly chart now, and let's take a look here. So if you guys take a look, the market came down, right, from the 78.6 over here. Market came all the way down, right, and then the market came up, tried to retest it. Market came down. Market came up again, and then market broke it with a big bearish engulfing again, right? So this is what I'm looking at this week right here, right? Which is really strong, right? Let me show you what I do, okay? So as you guys can see, the market came to another zone, this zone right here. Market came to this zone right here, and so far for the last few weeks, the market has been holding on to this zone, right? Last few months actually, the market has been holding on to this zone. So I know that the market is pushed up to this zone once, it broke it, it didn't like it. Market pushed up again and it didn't like it. And what do I have forming over here? Let's take a look right here. What do I have forming? What do I have forming? Just take a look at it. Just think about it. You have one leg, and then the leg comes down, and then the leg goes up. What do you think is forming? Yes, an M pattern, right? So the last leg of the M pattern seems to be forming, and coming back to previous structural area, right? So this is why this is such a good trade. So now let's take a look at this, right? Previous structural area, right? So we're looking for this market to come down to this area right here. Fantastic, right? Not bad. Now, how do we get a sniper entry? How do we get that stupid entry? That entry where you're not risking 100 pips, 80 pips. You know, an entry where you're risking 30 to 35 pips. You know what I mean? Where your risk to reward is absolutely amazing. At least a 3-to-1, if not more. Well, you know what? Now that the market has broken the area with this huge bearish engulfing right here, I want the market to retest this area right here, and then the market to come down. Now, this is the beauty about doing your analysis and being very flexible and sticking to your rules. Like, so I said that I wanted the market to come back to this support and resistance at 68.17, right? Nice area, nice support resistance line. Now let me show you guys this. If you take your fib from the high of the bearish engulfing candle to the low of the bearish engulfing candle, the middle of that candle is a 50% retracement. The 50% retracement lines absolutely perfectly with the with my support and resistance line. That's confluence right there. That lets me know that I am probably in the right direction, right? I'm probably in the right direction. I'm thinking about the right things. So I'm looking for the market to come. So let's mark up this area right here, right? So we see the 50% area right here. Boom, right there. Right? So I'm looking for the market to come down to this area. Fantastic, right? Now I have my zone set up. Now it looks like this. I'm looking for the market to do something like this. I'm looking for the market to come up and then the market to retest this area right here, right? That's a good risk to reward, right? All right, fantastic. So now let's push it on down to the daily. That's what we do, right? We work our way down from the monthly to the weekly to the daily, and then we try to find a very, very good entry on the H4 and H1, okay? So now that we've seen what's going on here on a weekly, and guys, don't forget about this area right here, right? Let's not forget about this 61.8 pullback, because what happens is if this week the market closes above this support and resistance right here, right? We're going to be looking for a pushback, and we're going to look for the market to retest the 61.8 before continuing the overall downtrend. So there's two scenarios here. There's still a long possibility and there's still a short possibility. The only thing that's constant is change. My job is to get myself ready so that way when the market presents the opportunity and the true trend presents itself, then I take advantage of it. That's it. My job is just to be a sniper. I'm just sitting there. I'm ducking. I'm in there just patiently waiting. So guys, let's take a look at it. This is the daily trend right here, right? I drew up this trend line right here. Look at this. Perfect taps, right? One tap, two tap, right? I'm possibly looking for another tap over here before the market comes over here. It's absolutely amazing. Absolutely amazing. So I'm looking for the market you know, at the beginning of the week to possibly do this right here, tap my trend line, and then go and tap my support resistance area, break my trend line, retest my trend line, make sure my trend line holds, and take this baby down. That's it, guys. Just like that. That's it. Just like that. Now, that's one scenario, right? The other scenario is the market could very well just take off. The market could very well take off at the beginning of this week, right? Break it, retest it, and come down. Just like that. That's it. It's that simple, guys. It's that simple. That simple. There's like this is technical analysis at its finest and at its simplest. That's it. You don't see a whole bunch of crap on my charts. And let's look at and let's look at this short position right here, okay? So I want to risk about, let's see, there's a little zone that I saw, 68.45. If I actually take you guys on a lower time frame, you'll see the zone that I'm talking about. I'm talking about this area right here, right? Talking about this area right here. Right, 68.55, right? That's a good place to have your SL right there. Let's go to the daily. So we want our stop loss to be at 68.55. So, yep, right there, right where we want, right? So entry at 68. Entry is like right below this line right here, right? So we're looking at about 68.15 entry, right? That's an aggressive entry. You know what I mean? You have an aggressive entry, you have a safe entry, right? Your safe entry would be to patiently wait for a break of the trend line, get a retest, and you're still in a good position because if you get a retest, you're going to be risking about 50 pips, and you'll see that your risk to reward is still going to be amazing, right? So let's do that, right? Let's do that. Let's bring this down right here, right? And you said we want to be at 68.55. So you're risking about 60 pips to get right here, all right? So that is a 5.9, so that's a 6-to-1 risk to reward, right? So you're risking 61 pips to get 750. That's actually incorrect, guys. You're risking 61 pips to get 68.17 to 64.26. Let me calculate that. 365 pips is our target. So we're risking 61 pips, and our target is 365 pips, right? 5.9 risk to reward. Easy, simple. Easy, simple. And all you're patiently waiting for is for the market to break our trend line. The market breaks our trend line, you wait for a pullback, right? You catch this entry right here and you're riding it down. And it's that simple. And we've broken this down from the monthly to the weekly to the daily. If you guys take a look right here, that if you look on a 4 hours, our trend line is still valid. The trend line is strong, it's valid. And look at where our SL is. Our SL is above small structural area right here, right? We're right there with it. So it's perfect. So whatever the market does at the beginning of the week, the market is going to come and possibly tap this trend line, or it's going to go up before coming to break it, right? But I'm strongly thinking that the market is going to come and tap our trend line, go back up to structure area, support and resistance area, then break it, retest it, and then we can take it for the short. So that's what I'm looking at, guys, on nzdusd. Quick little analysis. Happy pip hunting, ladies and gentlemen. I hope that you guys enjoyed this video, and have a great week, great profitable week. Thanks.